Hi, welcome to the Market Alert for Wednesday, the 17th of November 2021. So yesterday, stocks and dollar jump as bonds, bullion and Bitcoin dump. The dollar closed at its 13-month high, and that was because the retail numbers, when they came out, boosted the market, sent silver south, and then industrial production supported this, moving the dollar higher. Now, news today, while we're here, we've got CPI for the UK this morning. A bit of a joke, isn't it? 3.9% from 3.1. We know it's running around 15%, but hey, you know, they have the facility to manipulate the numbers however they wish to do so. So ECB financial stability review today. We've got FOMC Williams speaking. Bullard was out last night as well, which supported the dollar. And we've got Evans speaking again as well. So they're putting out the minor celebrities from the Fed during today as well. The implied volatility has moved lower. These are the lows we've seen in the last few weeks, and we're really coiling in this area here now, which you can see, which again is indicative of a market correction. So just a matter of time. Not a sell-off, not anything major. There's no reason to do that because I don't see Powell having the balls, frankly, to or the courage, to put it more politely, to continue with the tapering. Once the market starts to fall, they will then jump back to QE, otherwise the market implodes. Gold silver ratio more or less the same. Well, we're looking at news as well, down a bit there because silver's made a bit more of a comeback than gold, which we'll look at in just a moment. We'll start off with the Dow as ever, and yesterday you can see that we had an up move on the Dow, but it didn't hold with the market coming back before the close. In a sideways move, still sitting at the 5-bar moving average on the overnight, and in the 30-minute chart you can see the market's reaction to the retail sales and then the industrial production as well, and then trading up slightly higher than this through the previous day's high, which of course was Monday's, and then the market making its way back. Overnight prices finding a bit of support at the previous day's DP level there. News out shortly for the UK, so the market waiting for this. That's what the red line is here. It's currently 25 minutes to 7, so another 25 minutes before the data is actually released. So it'll be interesting to see how the market reacts. Meanwhile, in German land, yesterday, as you can see, we had a big move to the upside. The market breaking out, putting in a new all-time high. This is now in the 16,200 area, isn't it? Yeah, 268, heading towards 16,300. That will depend today on whether the Dow has any support. If it continues to move to the downside or breaks to the downside, then the DAX will follow. But yesterday the market moving higher, and it's a bit of a joke, isn't it, really, because it's moved higher on absolutely nothing but being marked up and fresh air, which we can see there. So let me just move the chart over to the left and space it out a bit, and let's just have a look just in case we get some sort of weakness in this market. And let's just draw in a fib from here to here and then project back, and you can see there are the areas of where you can expect, if the market moves back to the downside, then some sort of target areas on the downside. It'd take a lot to get back to there in one day, but never say never. We've seen it before. So they're the sort of downside targets, and of course to move to the upside you're going to have to take out yesterday's high, which has been a theme for the DAX for some time, hasn't it, as it's continued to move to the upside. In the 30-minute DAX we were launched not straight from the open. The market traded sideways, which you'll see in the 2-minute chart, but eventually when it broke it just continued all the way up with the Dow into the afternoon, has drifted back to the DP where it's found support on the overnight, and again is waiting for the CPI numbers from the UK at 7 AM. Meanwhile, in the 2-minute chart, what I just mentioned about yesterday, it wasn't straight off in the DAX. For the first hour and 15 minutes the market just traded in a sideways range, finding support at the R1. Interestingly enough, though, if we just wind back a bit, you can see how well the market moved in the futures when it opened at 7 AM, then traded sideways, and then that sideways move continuing at the R1, and then the market moving sharply higher. We had some resistance here at the R2. The market drifted back, but as soon as it closed back above the 5 bar and 20 bar moving average, it then banged its head against the R2. And if you're going to drive through any sort of resistance, you need a big bar of professional buying. That's what happened. We got some supply, followed by more buying, followed by more buying, and then the market stopping at that R3. And as I've said before, the R3, 99% of the time the market will drift sideways at this level, and that's precisely what happened yesterday. And then into the evening, you've seen the market making its way back below that R3, all the way down to the DP level, where the market has just come off and is at the moment struggling with the 200 MA, but needs to break through this. Again, waiting for the CPI news. And then finally, in the metals markets, you can see that silver was moved to the downside yesterday. We've got the 200 MA, and I was hoping that we were going to break through this, but no. JP Morgan and Co. used this to slam the price of silver on the retail sales numbers, and you can see this here. We hammered the market down. As soon as we got to the high, they just hammered the market to the downside. That said, the dollar moved higher yesterday, as you can see here. Last night the market spiking higher as well, but this didn't cause too much of a sell-off when you look at the daily chart of silver. Given times past, this would have been more like this, with the opportunity to slam the price, but we do need to break this 200 moving average. As I've said before, technical silver traders use the 20, the 50, the 100 and the 200 MA, and these need to be taken out, along with the 89% retracement that we've had drawn in for some time from this high to this low projected back here. So that needs to be removed convincingly as well, and also get through that 26 level. But it's good to see the market bouncing back there to the 25, which I wasn't quite expecting, to be honest with you, the way they were moving it last night, particularly in the early evening, when it started to drift down again. Here, when we took out the low, I was just having a look. But prices, like I say, having made their way back to the upside. If you're wondering what the S and the Ds are on the chart, that's supply and demand. That shows you in a sideways range when the pros are buying and selling. I'm currently working on a huge amount of videos with all of these new additions in the software, which should be out just before Christmas. So there you go. I'm committed now to actually get it done. But yeah, you'll really enjoy looking at the new signals, or the new information in the signals, which is a combination of a lot more things as well. So that's it for this one. Yeah, let's see what happens with the CPI figures at 7 AM, and then we can take a view from there. But at the moment, it's all fairly quiet. The DAX sideways to high there as well. Okay, that's it. As ever, thanks for watching. See you in the next one.